Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me remotely is Phil Mackintosh, Chief Economist at Nasdaq, to review how policymakers and investors are modeling out the global economic impacts of the coronavirus. And COVID-19 will continue to be the largest of headline risk, but oil and first quarter earnings will be in focus as analysts expect the deepest annual EPS decline for the S&P 500 since the third quarter of 2009. Phil, however, earnings could be a welcome change as COVID-19 completely dominated the news cycle over the past 4 to 5 weeks, so we're also in an earnings vacuum for the quarter.
Yeah, I mean, it'll be interesting to see what the company's CEOs say on the earnings calls as well, and also just to get a really hard data point on which industries are hurting the most and how much cash they think they've got to last what this might be in terms of, whether it's a 3 month or longer slowdown for them. So it's going to be some hard data on specific tickers, which will be interesting to see. It'll be interesting to see how the market reacts to those data points. And obviously, the commentary is going to be related to COVID, but it'll be nice to be able to focus on some single stocks for a bit.
All right, so moving along to our first slide here, returning to more normal levels in terms of volume and lit markets. What are you taking a look at here?
Yeah, obviously the spike in volumes that happened early in March was driven by the onset of the COVID cases and the acceleration of the new cases, and then the lockdown of the economy. And so we've been talking a lot about how the market's priced in a lot of bad news. And you can see that towards the end of the last couple of weeks, the volumes, the volatility, the realized volatility, the VIX, all those kinds of metrics have calmed down quite a lot. The one thing that I thought was interesting was last Thursday was actually a relatively high volume day. So remember, we had some pretty bad employment numbers. We had really bad consumer sentiment numbers. But the market ended up closing up 1% or 2%. And you can see that the VIX on all of the risk metrics seem to be calming despite the fact that we had extra volumes on Thursday.
All right, moving along to our next chart here, going back to flattening the curve and taking a look at that data. And even though it's flattened out over the weekend, which is great news, it still looks like it's a bit inconsistent. And I think the risk here is any spikes that we could get.
Yeah, and the risk is the fact that we still aren't doing a lot of testing too, isn't it? There's some really interesting op-eds coming out where people are saying that the number of people that have actually had COVID is way higher than we think, and we're already up nearly at 2 million people globally. If we're only testing the 20% of people that go into hospitals, then there's 4 times as many people out there. If the asymptomatic cases are 50% of all cases, then there's double that again. And so there's a couple of people saying maybe there's a lot more people that are cured and immune from COVID now than we realize. And that might actually help flatten the curve because they're obviously not going to catch it again and they're not going to pass it on. So they can come in contact with people on the street and not be a risk. And so that's an important development if only we knew what the real numbers were. In absence of all of that, it's just great to see that the curve has flattened. A week ago, we were sort of looking at New York or America having 600,000 cases. We haven't even got there yet. So that's good for the hospitals. It's good for families, and it's good for signs that we might actually be able to get this under control and get back to work at some time in the next few months.
All right, and our final slide here today, a recent article from the Financial Times. There's a link between mortality and the availability of hospital beds.
Yeah, so a lot of people early on were saying, testing. It's the only thing that's protecting society and the different countries from an explosion of new cases. And that seemed to be linked. But then when you look at the actual countries that were doing a lot of testing, it wasn't always true. So this is kind of an interesting counter. It's looking at the death rates of people. And Japan, Korea, and Germany have had relatively low percentages of people with COVID who have died from it. You can see from this chart that actually those countries have a pretty solid hospital system with lots of capacity. There is other studies, even when you look at what Italy's experience was, once you run out of ICU beds and you run out of ventilators, the mortality of people increases significantly. And of course, that's why people want to flatten the curve, because if you can keep the number of people in ICU beds lower than the number of beds that are available, at least everyone can get one and everyone can get the best sort of hospitalization possible. If you start sending sick people home, then that tends to increase the number of people that die from this significantly. And that's an adverse consequence of letting this run a bit too wild.
All right, Phil, great insight. Thanks so much for joining us today.
Thanks very much.
All right, thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.